Hi everyone, this is Martin. Welcome back to another weekly video. We're looking for trading opportunities for the upcoming week, and that is March the 14th to the 18th. Now, this is a very special week for all you parents out there. I just want to wish all of you a happy March break, especially for the kids. The kids love it this time of year, and hopefully you guys are doing something special together, going out, taking the kids perhaps to the zoo. We've got the brand new newborn baby panda bears at the zoo, so that should be quite a treat. As a matter of fact, I'm looking to go see the pandas later this summer as well. So take care, and we're gonna get right into the videos. This week, the basic theme is we're looking for the strong versus the weak currencies. How do we find the strong currencies? How do we find the weak currencies? And obviously, one of the better strategies is to trade the strong versus the weak currency. So in other words, find a strong currency, find a weak currency, then take a trade using those two currencies as the pair. And as we get going on this video, we're going to take a look at which of the currency pairs are probably the best opportunity to take trades for this coming week. Okay, so let's get right to it. We're going to start with the Euro USD. Okay, we're going to look at the Euro USD. You can take a look right here. This is the KISS chart, keep it simple, stupid, or as one of my favorite students has said, keep it super simple. So there's another way of looking at the KISS. And this is the weekly chart of the Euro USD. We can quickly see that basically the Euro USD is within a pennant, within a triangle, uh, and it's on its way up to test the upper trend line. So with this pair, we're basically looking to buy, looking for buyout opportunities, and the best way to do that is to drill down to the daily chart. Okay, we're going to do that right now. Now, according to the weekly chart, you can see this pair. It's on its way higher. Okay, and although it looks like it has hit just a minor resistance here, that's indicated with this downtrend line. So we kind of wait for it to break out. The start of last week was kind of interesting. I did say that we were in a weak downtrend. Okay, and that was indicated by the MACD here. The price was seemed to be going higher and instead of downwards. So we were looking for basically a counter trend up. And in this case, if you would have taken a buy stop or just above this resistance area that's indicated with this gray rectangle, you would have made quite a number of pips. So a buy stop just above there would have first profit target to at least there, but you would have made some really good pips on that one. So this week, again, we're looking to buy at the breakout. The breakout means just above here, and let's take a look here. So we're looking to buy just above the breakout, and I expect price to go to at least there, to at least even right up to the top of the gray rectangle. Okay, so the other thing is you can wait for a bit of a pullback, but I believe that's the best course of action. I believe the price is going to be going higher, and you can see with the MACD this week is just turned above zero. That means we're in a bullish mode. Okay, so the next pair we're going to look at is the. Let's take a look. We're going to look at the British pound USD. This is interesting because take a look here. We're in a down pennant, um, and price seems to be going higher. This is again the weekly chart of the British pound USD. So price is right here. You can see that on a weekly chart. Price looks like it's headed to at least up in this area right here. But again, we're going to have to drill down to the daily chart just to see if what resistance is lies ahead of this price just going higher. Now, the other thing I want to show you is the MACD. Okay, take a look down below. Do you see I've drawn a trend line from the low of the signal line here to the low here. And this trend line is rising, whereas you can see price here is falling down. So price is there. If there's a higher low here, here's a lower low. Price has been declining, while this line, the histogram and the signal line, has been rising. And this is indicative of what's called divergence. It's another way to use the MACD, which means that we would be looking for a buy opportunity, even though it's reversed right now, and I believe it's going to get higher. We still want to wait to see if, on a lower time frame, if the MACD histogram is rising toward the zero line. Let's do that right now, okay? And I'm going to switch to the let's go to the British pound USD. Now, you can see clearly here with the MACD, MACD histogram is getting smaller, smaller, smaller. In other words, rising toward the zero, and most likely will head up higher above the zero to cross the zero. You can see also the last candle has gone above the 50 moving average and seems to be going higher. So for this week, we're still in the counter trend. Okay, the counter trend means the overall trend is down. Okay, the overall trend is down, but for this to be basically for us to confirm that an uptrend has been established, it price would have to go higher above the previous swing high here and above this gray rectangle. For price, if price gets to here and ends up going higher, then definitely there's a price reversal and we're in an uptrend. But right now we're still in an overall downtrend. This is a counter trend. It's just a very deep counter trend, and that's okay. So we're either want to do two things. We either want to take a trade, continue the trade on its way higher to at least this area, the gray rectangle, and if it gets up to here, this 100 moving average is coming down. So at some point in time, this will be down to here, and so price will at least go and retest the previous swing high on the left side of your chart, right? If price reverses from here, then we're looking for a break of the trend line, and this is important. We want to look at the MACD and see that the histobars are becoming larger again, falling away from the zero line. So if the MACD does that and price is reversing, then we can get into a sell trade and toward the yellow trend line, which is long-term trend line. Short-term price would have to break below this shorter-term trend line here, and once price does that, it will fall all the way down to here. Okay, and that's another thing I want to mention. Something new with the charts this week. Every chart have these dark orange trend lines. These are trend lines taken off the weekly chart. So on a weekly chart, this is what you would see, and on the pink trend lines or the magenta trend lines here, this is what you would see on the daily chart. Okay, so this is more daily, shorter term, medium term, and these are long term ranges for where the price could go. Okay, now we're going to switch to the next chart, and that is going to be, let's take a look, the Australian USD. Now, here you can see this is a very strong chart. The Australian dollar is certainly showed its strength, okay, and it seems to be going up quite a bit. It's hit a bit of a minor resistance here, but if it breaks this, then obviously we can expect price to go much higher than that. So there's lots of room to the upside, and it would end up going to at least this resistance area with the pink or the magenta box or rectangle right there. Okay, and you can see the MACD, same thing as on the previous chart. Price here has made a lower low than the previous low. So price has been declining. The MACD, and I'm just going to draw that in. The MACD has been rising, okay, right here, which means that we're looking for a reversal. In fact, the great place for reversal would have been anywhere here or conservatively right above this 21 moving average, okay? You would have made a lot of good pips, but we're going to talk about this strategy, a reversal strategy using the MACD a little bit later on, not today, and that's another strategy that I will be teaching in the brand new course that is coming up a little bit later this year. So let's switch to the there we go. Let's switch to the daily chart. Australian USD. Now, last week we were in an uptrend continuation. We would have made some amazing pips because last week I said just take a buy trade. Look at that. We would have made at least, you know, 99 pips, 100 pips. Um, the start of last week was right here, right there. I'm sorry. The this was the Friday close of the previous week, and um, or even with that, knowing that we had broken the resistance, I would have gotten in on a Sunday, Monday, right there. Or if Sunday, Monday closed higher, I would have gotten in right there. Your stop loss would have been below the gray rectangle or below the this moving average here, or it could even have been below for an aggressive trader. Could have been below. This candle here for great risk to reward, and the price eventually went all the way up here. So terrific trade, and that and so for this week, bit of a caution. We have reached a bit of a resistance area here, so we're looking for a pullback continuation. Okay, and what that means is we're looking for a pullback and then a continuation higher. Okay, that's what we're looking at right there. So with the pullback could be to about the 30% mark of the this full of this full candle right here. Um, so down to about right here. If you want to do that, wait for a pullback here or even further. Okay. Uh, and that's quite all right. And just wait then for bullish evidence to the upside, or just wait for a breakout above the wick of the above this large candle right there. Okay. Now that next one we're looking at the New Zealand USD. Let's go to the weekly chart. Okay. Here is the New Zealand, and you can see on a weekly chart there's still it's basically price. I'm going to zoom that in a bit so you can see price has hit a bit of a resistance here with this 50 moving average. I believe price might most likely come down a bit. It might go a little bit higher, but we're within this triangle here. It is an ascending triangle. What that means is that the lows are getting larger than the previous low. So here is a higher low. Here's a previous lower low. Prices hit here once. Um, it looks like prices hit a resistance area, Price may go higher, hit another resistance area, then higher again. But um, the reason for this candle, remember, this is the weekly candle. It was because New Zealand lowered its interest rate by 1/4% on Wednesday. Okay, and that's the reason for that. And we'll take a closer look when we get to the um, there we go. When we get to the on Wednesday, you can see here this is this huge drop. That's because of the interest rate news that was on Wednesday at around 4 o'clock in the afternoon. But then since then, it's recovered and it's back at the resistance. So yeah, again, what you want to do is caution. Just wait. It may go sideways. May from here may come back down again because again, look at this major resistance area on the daily chart. Once, twice, three times, four times, five. Well, here's a false breakout. This is it went up and down. It's kind of a false breakout because it came all the way down with the interest rate news on Wednesday, and then it's recovered, but again, it's hit resistance. So from here, you want to wait at least. If it gets to above the wick here, you may want to park a buy stop order about 5 pips above the wick here. And if it gets filled, it most likely at this point will go higher to at least the next resistance area there. Okay, so that's what I see happening with the New Zealand dollar. Okay, this one, the US CAD, that's the next one. And you can see the US CAD has dropped from its high right here. It's come down already 1,392 pips. I mean, that's quite a huge drop. That's quite a reversal. We still are basically in an uptrend, as you can see. The MACD here, if you take down below, if you take a look at the MACD below, you see the histo bars are on the weekly chart anyways, is still above the zero, which once the histo bars gets below zero, then we would be in a downtrend mode, okay? And if that happens, then price would come down all the way down to here. But the reversal happened right here. You see where the histo bars cross the signal line, okay? Let me just show you for a second. Okay, right about there. Okay, so based on this huge engulfing candle, if you would have gotten in at the next candle or even the next one after that and ridden it down, you would have made just an absolute staggering huge profit on that one. So we are going to take a look at the daily chart, and we're going to switch over here to the US CAD. Now, again, remember the theme of the video is which currencies are the weakest, which ones are the strongest. Well, one of the strongest is the Canadian dollar. And again, you can see what's happened on the daily chart. Right now, we've hit a long term. See, this is the long term trend line right here that you would find on the weekly chart. So we've hit that. We've hit that. Support area. If price breaks this, then it's on its way down to this area where it might then reverse, go back up. If it gets even beyond that and breaks this area, it's going to come all the way down to here. So it's still got a long way to go if it breaks this area. So what are some of the things you can do? Well, caution, what I'm saying is you want to wait for evidence to the downside, or you could take a sell stop order just below the wick of here, or you can look for reversal. And now this is interesting. If you are a counter trend trader, what you want to do is take a buy above the 133.07. 133.07 if you are an aggressive trader, or 133.50, 133.50 right there if you were a conservative trader. And that's if price reverses. But you also want to do something very important. Remember, we're using the MACD as a filter. If you see the histo bars getting smaller and smaller and going toward the zero level, that's when you can jump in and take a buy trade. So basically what you want to do is wait till price gets to at least above there, okay? Whoop, let me just draw that in to at least there. If price gets above this area here, 133.50, 560 area, then you can take a buy trade, and then most likely price is going to go a lot higher, okay? But again, confirm that with the MACD. The histo bars have to be getting smaller and moving toward the zero level. So that's the pullback play, or just wait for a breakout to the downside, okay? And that coinciding with the oil, you can see oil is on its way up. This is the daily chart. Um, you can see oil has still a long way to go from here to this support area to this next resistance area. I'm going to zoom in to the 4-hour chart, just change that for a second. Okay, you can see price is kind of just going sideways right now in a channel. It's kind of, well, a pennant right here, but there's going to be a breakout either to the downside or to the upside, and I believe price will eventually like perhaps go higher. But again, take a look at the MACD. The MACD is kind of flat right here. MACD is not doing anything. It's flat. If the MACD, the histobars are declining and moving towards the zero, then price is going to come down. And you want to take a sell trade once price breaks the trend line and it's below either this area or this area, right? Okay. However, if price breaks up to the upside, then you can have a buy stop order just above these bars right here and catch the trade going higher. Right now, these bars are very, very, very tiny, which means that there's a lot of fighting going on between the bulls and the bears. Okay, you can see there's a lot of fighting back and forth. Bears want to take it down. The buyers want to take it up. Sellers want to take it down. Very, very tiny candles. So something's gonna happen very soon. You could also just wait and see if you like trading this currency or this is oil. This is, let's go back to the daily. This is the daily West Texas light sweet crude oil. Okay. I do want to go back for a second to the US CAD. Last week I said we are in a downtrend continuation. Right here, this was the close of Friday, the previous week, and we are in a downtrend continuation. It has gone down, down, down. Um, I probably would have taken well, waiting here, even though um, this Sunday, Monday trading session, it went down. And you would have gotten in at the open of the next candle. The next candle went up. However, your stop loss would have been above this, above here, right, or even above the 21, right? Your stop loss would have been above there, and you would not have been stopped out. In fact, you would have from here, price went up, price went down further, up a bit, down. So you would have been in profit. Okay, MACD is below zero and still seems to be heading toward the downside. Okay, and now we're going to get to, let's take a look. We're going to get to the US Swiss franc weekly. You can see prices now kind of squeezed in between a lower trend line. These are long-term trend line. This is the weekly chart, and price is now below the 21 here. So I believe price can still go down further to at least retest this. Retest the 50 moving average here. So I believe price is going to come back down and then may bounce back up again. You can see the MACD, the histo bars are declining toward the zero. They're getting smaller, which means where the uptrend has been losing steam, has been losing momentum, and there's more momentum to the downside right now. Okay, so let's switch to the daily chart. Okay, on the daily chart, you can see then price has now broken below support and it's headed downwards towards at least a 200 moving average, which is important. And that's a major area of support. So I believe price has still got a little ways to go down, but there's caution. We're not that far off from that area. So you want to just, if you're going to take a sell trade, that's good, but make sure you at least have a target profit level in case you're not by your computer, so it can close at least with some profit. Okay. And last week I said wait. We were basically sideways. If you would have taken a sell trade based on this candle right here, okay. At the end of the day, if you would have seen this huge, large engulfing candle taking a trade at the open of the next candle, then you would have been in the profit by at least 30 pips, okay? And this is the long-term trend line right here. You can see the MACD also has just gone, it's just below the zero, and the histobars seem to be getting larger and longer, moving away from the zero. So we're in a downtrend mode, okay? And now we get to the US Japanese pair. Okay, here you can see the U.S. Japanese pair. The U.S. against the Japanese pair has come down quite a bit, but now on a long-term weekly chart, you can see the lower trend line right here. Prices come down here. It's now starting to go sideways, and it's actually gone sideways for 1, 2, 3, 4 weeks. So this is the weekly chart. So, going sideways 4 weeks, expect something to happen. And that can either be to the upside or to the downside. I'm going to take a look at the MACD. Okay, if you're looking for something to happen to the upside, the histobars have to be getting smaller and moving towards zero, and they also have to, the histobars have to be below the signal line. See this red line right here? Okay, that's an indication and a big clue on the weekly chart, at least, that price is reversing. Now we're going to switch. And by the way, this chart does show you the weakness of the US dollar on this pair as well as the Canadian pair. Um, and as well as against the euro. Okay, so with the theme of this week, one of the weaker pairs is the US dollar, and by now you might have gathered that the stronger pairs are the Australian dollar, the Canadian dollar, the euro is picking up a bit of steam as well. Okay, and let's go to the daily chart. You can see it's just sideways. It's been going sideways for quite some time. As a matter of fact, do you see here the upper gray rectangle? This is resistance. The lower gray rectangle, this is support. So as long as price is bouncing in between, I would not take any trades for this week. Just wait. Okay. And last week I did say wait. So you want price to break out to the upside above this gray rectangle or to the downside below this gray rectangle. The MACD is below zero. However, the histobars are moving toward the zero level, which means the downtrend is weakening. Perhaps there's going to be a breakout soon to the upside. It's a wait and see situation. So right now, I would not trade this pair. Okay. And finally, we're going to come to uh, I'm sorry, that is the US Japanese. So the last thing I want to talk about again is the strong pairs versus the weak pairs, and one of the cross. We're just going to look at two or three cross pairs this week. We're not going to do a whole bunch because of time constraints. And one of the pairs that I want you to look at, and that might be a great buying opportunity, might be the Canadian Japanese yen, the Canadian dollar. We have ascertained as being one of the strongest pairs. Right now, the Japanese yen is a very weak pair. So putting these together, trading the strong against the weak one and taking a buy trade, that would be a possible good idea. The MACD histobars are getting smaller, which is good. This is what we're looking for, moving closer toward the zero level. So basically counter trend, and we're going to take a look. Right now, the weekly charts are just giving us the direction. So the possible direction for counter trend would be up here, but it's the daily chart that we have to look at, which is going to give us the entry opportunities. So let's take a look at that. Okay, so Canadian Japanese yen daily, and you can see it looks like price is heading higher. This is an engulfing candle. This was the close on Friday, so you could probably take a buy trade right now, and the price will go up to at least the 100 moving average, probably higher to at least the trend line, somewhere in that area, and make sure you take your profits off the table once it gets there. But the other thing is wait for a slight pullback, and then a buy trade to the upside. MACD is above zero. The histobars are getting larger away from zero. We're in a bullish mode. Okay, so that's one good pair. Strong pair versus weak one, and we're going to take another one right now, and let's switch to the Australian Japanese. We already ascertained that the Australian pair is very strong, Japanese pair weak. So trading the strong against the weak, that's a great strategy. You can see up, up, up for the Australian dollar. And I expect the Australian dollar go up to at least this area right here. The histobars are getting a little bit smaller, moving towards zero. And we're going to switch to the daily chart. Okay, same thing. However, caution, caution. Okay, I believe we're in an uptrend continuation, but this time we've hit a resistance area. See with this gray rectangle? So what you want to do is wait for a pullback and then wait for a bullish confirmation to the upside. Okay, if you take I would not take a buy trade right now. I would wait for a pullback. Or the other thing is just take a buy stop order about 7, 8 pips above the wick here. Okay, above this wick, and that's what you can do. But I think this price is going to pull back a bit and go higher, so that's the that's one entry idea right there, or just wait for a breakout above the wick over here. Okay, and our final cross pair, keeping in with the theme of this week, strong pair versus a weak pair, and guess what? We're going to now jump to the Australian New Zealand dollar. Okay, take a look, weekly chart. Wow, look at that huge weekly candle. I believe there could be a bit of a pullback first before it goes higher, but eventually it could probably retest the previous swing high here, previous swing high, the trend line, and also look at this, the 200 moving average coming down here. So eventually I think price is going to retest the high there. We will now switch to the daily chart. Okay, you can see now on the daily chart, price already once it went up quite a bit, and then there was the pullback here. Okay, uh, and by the way, this huge up candle was because of the interest rate. Lowering of the interest rate by the New Zealand Bank on Wednesday. So that's why this huge candle on the Wednesday, but it's pulled back a bit and now it's on its way up. I would just take a buy trade actually right now, or take a buy trade just above the wick here, and hopefully we'll catch some pips all the way up to this area. So one strong currency versus a weak buy opportunity for this currency. Okay. So, one final note of caution for future trading. As you know, and hopefully many of you caught this, but on Thursday we had the European Central Bank. It also lowered its three different interest rates. One of them being is the main refinancing rate and also a lending rate, and they're just lowering the rates. The euro's doing whatever they can just to keep their economy as healthy as they can, despite all the setbacks. They also, the European Central Bank also talked about purchasing billions of assets and buying debts. And that's the reason why price over here, take a look at this candle on Thursday, this huge candle, and this is a huge daily range of more than 400 pips. Take a look. Well, about 370 pips, close to 400 pips, okay? And so at first, at the open here, price went all the way down because a lot of people think that when they lowered interest rates, it's negative news. But because the European Central Bank also talked about on the second part, besides lowering interest rates, they were going to buy back assets and debts and all kinds of things to prop the interest rates up and keep the economy going. That's why price rebounded from a low here and went all the way up. And this is another reason why, if you're an intraday trader, you have to watch the news. If you're intraday, that means trading during the daytime, getting in and out of trades. You always have to look ahead, one day ahead, at the news to see if there's any major news coming. And in this case, the best place to go is forexfactory.com. That'll give you the daily news. Now, if you're an end of day trader and just trading off the daily charts, this wouldn't have mattered because you would have come in after 5 o'clock or sometime in the evening, seen this candle. You would have looked at it and said the first thing, "Whoa, my goodness, something happened earlier today. I'm not even going to get into a trade. I better check to see what news came out." And you would have found out that it was the European Central Bank. But the other thing is, after a huge move like that, there's always got to be a retracement. And so this is what's happened. Right now, I would not do anything. We are this week I would buy at the breakout though. I believe the euro with the shown with this huge upward candle, the MACD histos are just above the zero line right here. So we're in a bullish mode. If you want to do anything, take a buy stop order just above the high of that wick, about 5, 6, 7 pips above there, and most likely price is going to go higher over the next little while to at least retest the previous high, but at least to this major downtrend line. See with this orange line? So price will go from here to at least there. Now that's a great area to take your first profit. Okay, so lots of news last week. Three banks with their interest rates. Wednesday, Bank of Canada did not change their interest rates. The Bank of New Zealand on Wednesday lowered their interest rates, and on Thursday, European Central Bank actually lowered all of its interest rates, and so lots of volatility on a couple of days at least. You also know the strongest, weakest currencies. Um, the strongest are the Australian dollar, Canadian dollar, Euro dollar. The weakest is the Japanese yen as well as the US dollar. And so you can look for trading opportunities. Trade strong against the weak. That's another great strategy. And hopefully this video helps all of you. We're going to look forward to the next time we meet, the next video. Take care. Happy trading. And if you have any questions, send me some emails. Take care, everyone. Bye-bye.